Warren Buffett has long been seen as the Oracle of Omaha, a man whose financial principles have shaped generations of investors. For decades, he stood behind one golden rule: never invest in something you don't understand. And yet, in a quiet but deliberate move that has started rippling across Wall Street, Buffett has done exactly that. He's broken his own rule. Now, people are starting to ask, if Buffett is changing his playbook, what does that mean for the rest of us? Imagine this: you're sitting in the annual Berkshire Hathaway meeting. Buffett, as usual, walks on stage with that calm, understated charisma. He talks about patience, value, and long-term thinking. It's what everyone expects. But this time, there's a small moment, a comment, a subtle admission that suggests something has changed. A move that doesn't quite fit the Buffett mold. And as analysts dig into the numbers and announcements that followed, it becomes obvious. He's made an investment that seems, on the surface, to defy his most famous wisdom. Not only that, but it's in a sector he's traditionally avoided. This isn't just a minor detour. This is Warren Buffett signaling something big, and Wall Street is feeling the tremor. For decades, Buffett's name was synonymous with reliability. His strategies were rooted in companies with strong fundamentals, clear cash flows, and business models he could explain to a fifth grader. He avoided the tech boom of the late 90s, missed out on early crypto, and publicly steered clear of industries driven by hype or speculation. He didn't chase trends. He waited until the dust settled. That's what made him Buffett. So when Berkshire Hathaway revealed a significant stake in a high-growth technology company heavily involved in artificial intelligence, eyebrows were raised. This wasn't the kind of company that made Coca-Cola or sold insurance. This was an industry Buffett once compared to gambling. And yet, here we are. Wall Street doesn't panic easily. It reacts. And when Buffett makes a bold move, the reaction isn't fear, it's scrutiny. Suddenly, analysts are reviewing his recent interviews, parsing every word for clues. What changed? Is Buffett adapting, evolving, or has the world simply shifted so dramatically that even the most steadfast investor has to recalibrate? It's easy to forget that Buffett, while conservative in approach, is not stuck in the past. His mentor Benjamin Graham taught him to value facts over opinions, and sometimes the facts change. So what exactly did Buffett do? He bought into a company whose future is wrapped in innovation, whose core growth is driven by technology he once dismissed. And while some see it as a contradiction, others see it as strategic evolution. Maybe Buffett didn't break his rule. Maybe he redefined it. Because understanding something doesn't just mean knowing how it works today. It can also mean recognizing where it's heading tomorrow. And perhaps Buffett, ever the visionary, is seeing something the rest of us are just beginning to grasp. This shift didn't happen overnight. Over the past few years, we've seen subtle signs that Buffett's strategy was becoming more flexible. The Apple stake was the first clue. At first, it was described as a consumer product play. Apple, after all, makes physical devices that people love. But as Apple grew into a services and data giant, it became harder to reconcile the investment with Buffett's traditional philosophy. Still, the returns spoke for themselves. And maybe that's when the seed was planted. Maybe that's when Buffett realized that understanding a business isn't just about how it makes money today. It's about how resilient and essential it will be tomorrow. Think about that for a moment. The man who avoided dot-com stocks now owns a piece of the infrastructure powering the next digital revolution. He's investing in the future, not because he's abandoning his principles, but because he's applying them in a world that looks very different from 1985. And that's what separates good investors from great ones. Not the ability to follow rules, but the ability to adapt when necessary, without losing the core philosophy that got them there. Of course, not everyone is convinced. Some critics argue that Buffett is being influenced by the new generation of leadership at Berkshire. Others say it's a hedge, a way to stay relevant in a market dominated by tech giants. But if you look closely, there's a method to the madness. Buffett isn't investing in just any tech firm. He's choosing companies with strong moats, loyal user bases, recurring revenues, and massive cash reserves. In other words, the same attributes he's always looked for: just in a different costume. Wall Street, meanwhile, is in a bit of a bind. If Buffett is getting into these names, does that mean value investing as we knew it is dead? Or is it simply evolving? The debate is raging in hedge fund meetings, portfolio management calls, and analyst desks. Because when the most disciplined investor in modern history shifts gears, it forces everyone to re-examine their own playbook. And in a market driven increasingly by AI, data, and algorithmic precision, Buffett's move feels like both an endorsement and a warning. And hey, if you've made it this far into the video, you're clearly someone who cares about understanding what's really going on behind the headlines. So take a second to subscribe to the channel if you haven't already. We're not here for hype. We're here for clarity. For breaking down moves like this and giving you the real story behind the market noise. Also, drop your thoughts in the comments. Do you think Buffett's move is a sign of wisdom or a mistake? Is this evolution, or are we watching a legend compromise his legacy? I want to hear what you think. Now back to the story. When Buffett makes a move, it's not just about stocks. It's about signals. In a time when markets are jittery, when interest rates are swinging, and when inflation remains unpredictable, Buffett's decision to embrace an unfamiliar sector is sending a message. He's not betting on hype. He's betting on inevitability. He's betting on a future where companies that understand AI, data, and scale will dominate every industry, from retail to healthcare to finance. And that's the part that really unsettles Wall Street. Because if Buffett is getting in now, that could mean one of two things. One, he believes we're only at the beginning of a multi-decade transformation. Or two, he believes the window of opportunity is closing, and now is the time to act. Either scenario carries weight. If it's the former, there's still time to get in strategically, cautiously, and with an eye on fundamentals. If it's the latter, then those who've been sitting on the sidelines may have already missed the train. But let's not forget who we're talking about. Buffett doesn't do panic. He doesn't do FOMO. He waits, he watches, and when he moves, it's because the price is right and the business is real. So perhaps the most valuable takeaway here isn't the specific company he invested in, but the criteria he used to justify the move. Cash flow, long-term durability, ethical leadership, and market relevance. If those boxes are ticked, maybe the sector doesn't matter as much anymore. In a way, this moment is less about Buffett and more about us. About how we, as investors or curious observers, respond to change. Do we cling to old definitions, or do we adapt with the times? Do we stick with outdated models because they feel safe, or do we follow the data and the signals even when they're uncomfortable? Buffett is 94 years old, and still learning, still evolving. That should inspire us. This isn't the first time he's surprised us. Remember when he bought railroads, back when people thought trains were a dying industry? Or when he stepped into solar energy, despite being labeled a fossil fuel loyalist? Every major Buffett move feels like a contradiction, until it's proven right. So maybe the real lesson here is that wisdom isn't static. It's dynamic, and even the wisest among us know when it's time to pivot. So what does all this mean for your portfolio? Maybe nothing, or maybe everything. The key isn't to copy Buffett blindly. It's to understand why he does what he does. What principles guide his decisions? What metrics does he trust when the noise gets too loud? And most importantly, how does he stay true to his core while adapting to the world around him? That's what makes this moment so powerful. It's not about a rule being broken. It's about a rule being tested, challenged, and ultimately updated. Because the best rules evolve. They grow with you. They don't trap you in the past. They guide you into the future. And that's what Buffett seems to be doing now. So next time you hear someone say, Buffett broke his rule, remember, rules are only useful if they serve your purpose. And sometimes the purpose changes. Sometimes the market forces your hand. And if you're wise enough to listen, you'll adjust without losing yourself. Just like Buffett. If the story caught your attention, wait until you hear what happened when he quietly started buying up shares in a company most analysts had written off as doomed. It's a twist you won't believe, and it could signal the next big move in Buffett's evolving strategy.